Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, so today we're going to talk about mortgage rates. This is brand new data just came out. Mortgage refinance demand jumps 18% as interest rates drop for the fifth straight week. This is obviously terrible news for the housing market, right?
Okay. I don't see how.
Okay, it's not. Okay, let's talk about this. First of all, why would refinance demand be jumping? Okay, interest rates have fallen for the fifth straight week.
Right.
Okay, why would refinances be going up if all these people have 2 and 3% loans from a couple years ago?
Right. So, because not everybody took advantage of those rates.
Okay, so first of all, you have people that had higher interest rates.
Mm-hmm.
They didn't refinance when they were below 3 because they were being told they're going to keep going lower, right?
For whatever reason.
Okay. And who else?
People who recently got mortgages.
So those people who got the 7.5% mortgages,
Right.
who we were all told they're going to be foreclosed next year, forced to sell.
Right.
Right? As soon as home prices drop, that's the magic thing they always say, forced to sell, right? No one's forced to sell. They're all refinancing. They're refinancing quite a bit now.
Yes.
Okay. So they're now, and some of these rates are pretty low.
Mm-hmm.
I actually talked to somebody who said they got a 5% rate on a refi.
Yes.
That's no kidding. Now remember, the median number, that's not the median number. They have probably an awesome credit score.
Right. So look, we've talked about this before. The interest rate that you are charged is based on a lot of things, like your credit, your credit score, your how much money you have. So maybe, for example, Wells Fargo does this. So Wells Fargo, if you have a relationship with them, is what they call it. Basically, if you have a lot of assets with them, whether it's your 401k or your IRA or your brokerage account or whatever. So if you've got a ton of money with them, then they'll give you a great rate. And it's the same thing with everybody. Same thing with Bank of America and all the other banks. They all want to keep you in-house for all their products. So all of those things play into it. So you can get a great rate out there. It's just a matter of what your situation is versus what the lender is offering.
Refinance demand surged 18% week to week, but was still 75% lower than the same week 1 year ago. So people that waited till the end for rates to go below like 1%, I guess, realized instance they were going up to take advantage of them, right?
Right.
And refi at 3.5 or 3.75 rather than whatever they had, 5 or 6 or whatever.
Right.
They couldn't wait it out anymore. Okay, that's basically the bottom line. Okay, this is the interesting one. There's next two slides are the interesting one. So that's refis. Now, there's two types of mortgage transactions that happen.
Right. There's purchases and refinances.
Okay, refi, and now refis for the most part, this was a bad year for refis because almost nobody was refining like 6 months ago, basically. Right. Very few people were. Okay.
Yeah.
Mortgage applications to purchase a home rose 3%, which isn't much over a week. Still 30%, 7% lower than the same week 1 year ago. Mm-hmm. So that's not really that great news. What the amazing news is, the average loan size on a purchase application increased to $428,500, the largest average since May 2022.
So what does that say to us? Well, if the amount being financed or if the purchase price is going up, that means that not only are real estate prices not tanking, but they are increasing. The affordability thing we can talk about separately, but by and large, what we're seeing is that prices are going up.
Yeah, the median prices peaked at about 4.6. I think it was 4.16 or something.
Something like that, yeah.
So this is definitely something to look at. Now, it's possible that it's the mix of people buying. Mm-hmm. So it's possible you have all these people buying on the low end with cash, and that you have people buying on the high end with loans. As Juana was saying, if you have a wealth manager that's managing a few $1 million of assets, and you say, hey, I want to go buy that, $2 million beach house, but I don't want to use my cash. I want to get a loan from my bank who's managing a bunch of money for me. They don't say, oh, well, let me see what mortgage rates are. Oh, they're 5.8% for your 780 credit score. they don't give you 5.8%. You'll just be like, oh, forget it, I'll just shop it around. They cut off a substantial percentage,
Right.
like a substantial percentage of that to give, because they know you're good. They're holding or managing your other assets.
Right. So it's not that they're looking for you to have the same amount in their institution as what you're borrowing, but they are looking to make sure that you have a substantial amount in their institution and that you have a track record with them, and then they'll go ahead and give you a very sweet deal.
Yeah, so we're very sensitive to sometimes the numbers don't tell the whole picture. Mm-hmm. Now, if this happens months and months in a row, this could mean something. But right. This is interesting that the average loan size is up, and it's biggest since May, because June was the peak of the prices before the decline to the end of the year, right?
You know, something kind of tangential to this, I was chatting with somebody the other day, and we were talking about loans, particularly on the higher end loans, jumbo loans. And this person was telling me that she has 3 jumbo loans on 3 separate properties. They're all conventional, and all 3 of them are assumable. So 3 jumbo loans, 3 separate properties, they're all assumable. Oh, and did I mention that they're all about like 3%? So if she ever puts her houses on the market, she's got something that no one else probably has, which is these loans that are assumable and that somebody might want to assume. So I thought that was really interesting.
Here's a quote from the article. Purchase activity that was put on hold last year due to the quick run-up in rates is gradually coming back as rates ease, and housing demand remains strong, driven by supportive demographics and the ongoing strength in the job market, says Joel Ken, an MBA economist. He's absolutely right. Mm-hmm. Like, this is exactly what happened. Mortgage rates went up. A lot of people said, no thanks. The crashers came out and said it was going to crash. Home prices declined a bit. Some of that was FOMO. Some people dumped their houses. Probably going to, in 2 or 3 years, probably a mistake. We'll see. Time always tells. Just like, look, there were people in 2013 that panic sold because of the looming millions of properties shadow inventory. Remember shadow inventory? Mm-hmm. Shadow inventory. You can Google it on Todd Miller TV, and you can go find the article, the video that we did about it. 2018-19, same thing happened. Housing crash. A bunch of people sold there, and then since then, of course, it's we're going to find out. But here's the fun thing: on yesterday's video, I showed the CD from Talk About Houses. That this is what's pretty cool about this. So Talk About Houses. Well, you tell them what was Talk About Houses?
So Talk About Houses was our radio show that we did way back when in 2008.
No, 6 and 7.
2006 and 7. See,
yeah,
it's been a long time.
Yep.
So in 2006 and 7, we did Talk About Houses on the radio. It was a half-an-hour radio show here in Las Vegas on a talk radio station, and they were recorded. So once they were recorded, we would take the CD from the station and we would upload it to a website called Talk About Houses, and people could then on their own time listen to the show. Now, what was cool about that is that this was before podcasting was a thing. I don't even know if the word podcast existed yet.
It didn't exist.
So it was kind of cool. So we were pioneers and didn't even know it.
What's cool is I went on the Wayback Machine and I found the site. The Wayback Machine recorded. Now, unfortunately, it didn't keep images. It only kept the HTML, all the text and everything. So there's pictures on here, but you can't see them. And there's a bunch of text. We had a giveaway, I think. We were giving away, if you went under contract before
we were giving away iPads, I think.
It was a 50-inch plasma screen TV or something for everybody that had a closing prior to like the Super Bowl or something of 2007. But this snapshot is from 2007, but this episode we have here is from 2006. It was an interesting time back then. Mm-hmm. Of course, videos, we pivoted to video in 08 or 09. That's when we started this channel and started talking about, and you can go back and look at those old videos. You go back to the oldest. If you sort in YouTube, you hit oldest and you can go back and find, you'll probably look at them and say, are they their children? Their children look just like them. They're not our children. They're us. Okay. If jobs stay high, the economy stays pretty good, interest rates could kind of level out. the best thing that can happen to the housing market's in one of these weird places. Bad economic news could actually be good for the housing market. Why is that? If the economy starts to like slow down really bad, what could happen?
So if the economy slows down dramatically, then Chairman Powell is likely to ease off on interest rate hikes and maybe even back down on a couple of them. We'll see what happens. He is very concerned about inflation, so I think that's still predominantly his number one priority. So I think that inflation would have to continue to be kept at bay. So if inflation continues to go up or doesn't go down, I don't think he's going to do that. But I think if inflation goes down and the economy slows down, he'll definitely back down on those interest rates. If he backs down the interest rates, then mortgage rates are likely to follow as well.
Okay, the other thing that could happen is if the economy does really well, like it's been doing pretty well now, people have employed, companies are growing overall, not specific companies that furloughed or that cut staff, then we have a large buyer pool. So we kind of are in this situation where it's like a U. Right in the middle is like the status quo is like kind of the worst case for the housing market. If you get on either side, though, you get elements of each make it better for housing. I think we're going to look back at this on the future, and we're going to forget about the up and down this year or 2022. And all we're going to see is we had inflation and home prices went up. And people are going to go, well, yeah, home prices went up because of inflation. But I'm sure when the inflation started in the 80s and the 90s and those other periods where home prices went up, and mortgage interest rates went up during those times, but home prices still went up, where people were probably saying the same thing. Oh, well, this can't be great for housing if mortgage rates go up. But I mean, it definitely, I thought so far it's been a relatively soft landing, an adjustment, sort of like we said.
So things are not dramatic. Things are pretty mellow.
Yep.
Kind of like we said, 2023 so far, knock on wood, has been a pretty mellow year. No roller coasters, and we like it that way. If the video was interesting, if you liked hearing about the Wayback Machine, and if you are interested in real estate data, please like the video, share the video, subscribe, hit the notification bell.
Oh, you know what I'm going to do, though? What? I'm going to go find like some clips. I'm going to play these and find some clips from like 2006 and then find where we like called the housing crash and stuff like that way back then.
So my question to you is, how are you going to do that since no one has a CD player anymore?
Oh my gosh. That's right. I don't even remember how these work. How do these work? Do you have to, you know what? I have the new MacBooks don't even take these. They don't take anything.
Well, my old MacBook doesn't take it either.
The new MacBooks don't even have the USB.
Nope.
They have nothing.
So we'll have to contemplate how we're going to do that for you. But anyway, so like the video, share the video, subscribe, hit the notification bell, and we'll see you on the next video. Bye.
Bye.